Now, the next couple of videos are very important for you to understand. They go over what I look for in the trade confirmations, what I look for to confirm my entries, and this is very important and crucial for you to understand because without your confirmation, without you entering the trade, you're never going to be able to put a position on. And because of that, if you never put a position on, you're just going to be sitting there sidelined. You're going to be guessing a lot. And you're never ever going to either make money and you're not going to be able to follow the plan if you do not have your confirmations. Confirmations make up a good portion of the trading plan equation. So it's very important for you to understand what to look for. And in the next couple of sections, like I said, I'm going to explain what I use as confirmations. Now, do not limit yourself to only what I use. I use anything that will gauge sellers or buyers' interest inside of a supply or demand zone. And you'll understand as you go on the next couple of sections what I look for and why. But if there's something that you use that I don't mention, do not limit yourself to just what I use. You could use indicators that you're comfortable with. I personally stay away from indicators. Anything that's you can add to the supply and demand strategy that you have used before in the past, what gives you extra confirmation, extra confluence, is only going to be beneficial to your trading. So the first thing I want to go over is price action or newer supply and demand forming. Now, the most important thing to understand about confirmations, this is before we begin, is that no one's going to ever know when to enter. You can have your trading plan, your trading system, well before the market's open. But when the market's actually trading, it tells us a story. We have to be comprehending what the market's telling us. We have to listen to the storyteller, and we have to act upon that. So no one's going to know when to enter. All we have to do is watch price and let it tell us the story. It's going to tell us when. Our zones tell us where. Let the market, let price, let volume, let it tell us when. And when we get that when feature, that's going to be our confirmation. That's going to be the entry signal. Then we take the trade, long or short, calls or puts, whatever instrument you're trading. And then all we have to do is execute, get our entry, and we manage our risk. If it works, it works. If it doesn't work, it doesn't work. There's trades where we get perfect confirmation. It looks beautiful, right? And it doesn't work, and we take a losing trade. That's normal in trading. Confirmations are not guaranteed wins. Confirmations just tell us when to enter, and our imbalances, supply and demand zones, tell us where. And the key is letting price tell you, like I just mentioned. There are many confirmations that we look for, and they all have to do with price and volume themselves. As I mentioned, again, I don't want to keep repeating myself, but I do not want you to be limited to what I'm going to explain in the next couple of lessons and videos. Use whatever works for you, add it to the strategy, subtract it from the strategy, whatever works. I'm just going to go over what works for me. So the first one is price action or new supply demand forming. So if price is stalling out at a supply or demand zone, go ahead and enter the trade. Your risk should be very small at this point. Now, as we get into the charts, which I'm going to show you right after this, you're going to understand what I mean by this. But if you see price stalling out, it cannot move any higher in a supply zone or any lower in a demand zone. Maybe you have some type of hidden buyer down there or hidden seller, and he's kind of absorbing price. He's getting ready to unleash the beast, and the stock could very well reverse. If you see it stalling out, volume drying out, momentum slowing down, at this point, your risk should be very small if your stop's above the high, below the low, and take the trade. No one's going to ever know when to enter. No one's going to know the exact moment. There's never such thing called, a perfect entry, a perfect exit, because in hindsight, it's going to look better after the fact. But no one knows that this is the top or this is the bottom or this is the right point to enter or the wrong point to enter. So enter the trade. If it doesn't work, it doesn't work. Your risk is small. Who cares? Another thing I look for is new supply or demand forming inside of an existing imbalance. You could take the trade with speculation that a new imbalance may form. So speculation is a big thing. I tend to find a lot more losing trades with speculation, but that's normal because it becomes second nature with more screen time and experience. You start recognizing these things with more time behind the screens, with more experiencing, watching price action, react to certain events, certain zones. And it also will become easier with the strong mental state. That comes confluent with more screen time and experience. More experience you have, the bumpier the road's going to become, and that's going to just sharpen your mental game. It's going to make you stronger. You lift weights and you get stronger every day. It's the same thing with trading. You get beat around, you take losses, your mental game's only going to get stronger if you let it get stronger. So because of this, you have to accept a lot of small losses with this type of confirmation, while your winners are much longer. Sometimes you get in a little prematurely and you have to let the trade develop, and you might take a little bit of a beating before it starts working out. But it just becomes second nature. A lot of people ask me, what did I see there? What made you enter? And I kind of don't have an answer for them because I just seen how certain things react to certain situations. And I've seen this before. I'm going to put the trade on. If it doesn't work, cool. I'll exit for a small loss. If it works, beautiful. Good on my end with my analysis. So this comes with second nature, but it's very important for you to focus on price action and newer supply and demand forming. And you're going to understand why when I show you these charts. Here we have Apple, and on the left we have Apple, a 2-hour time frame chart with extended hours off. Now, from the previous couple of videos, how we chart supply and demand zones on stocks, it's very important for you to take extended hours off when you're charting stocks only, not for futures. So here we have a valid drop, a base, and a drop on a 2-hour time frame. So that is a valid supply zone that formed. If I zoom out, you see it better. Then on the next day, we traded inside of that supply zone, rejected pretty nicely from the lower wick and from the red candle. So this was a nice trade the following day. So now there's two things I want you to get out of this. One is the obvious supply zone that formed here. And number two, we have a used zone. So I marked it and labeled it as used because used zones tend to get broken easier just because of price test that area before. It may have taken a couple orders out in the process. Worked the first time, may work the second time, may not work may work or may not work the second time. It really just depends on price itself and how strong the level is. There's no real way to gauge to it unless price actually trades at the zone. So now we have Apple about a month or so later. So the imbalance was formed September 3rd. And the first time we touched the zone was the following day on September 4th. And now a month and a half or so later, we're testing the imbalance again. It's the first time price actually traded at the level. So now if I go to a 5-minute chart, now you all know from my trade confirmations, I use a 5 and 15-minute chart to confirm. Always a 5 and 15-minute chart. So this is what I mean about new supply forming inside of an old or existing supply zone. Minimize this a little bit. So here we had an Apple very strong rally into this used 2-hour zone. We start coming up, and now if you look at this candle, if I zoom in a little bit, we had a nice upper wick, rejecting a little bit. So now we're telling me a little bit that sellers are kind of present. Now the next candle is we have a valid rally, a base at supply, and a valid drop, below 123-ish area. So once we start coming below, this basing candle, the red candles are very strong, kind of like engulfing, but a very strong bodied candle to the downside, very heavy selling pressure if you were watching price action develop. This is a valid entry, and where you see my yellow circle, I'll remark that. This is a valid point for you to take this trade short. We get a nice rally base drop at supply, take the trade short, put your stop loss above the high. Then price starts coming up. Now, this is what's very important. Stick to your plan, stick to your original stop loss level. If you get stopped out, who cares? It was good confirmation. If it works, even better. Because eventually we came up and we would have stopped out of this trade. It was not a proper, it was a proper trade, but it was not a winning trade. We got proper rally base drop supply forming inside of an old supply zone. So that is something that I look for in a supply or demand zone. Here we have /NQ, which is the NASDAQ 100 futures. And the same thing like how we trade /ES or any type of futures, we trade with extended hours on. Unlike stocks where we take them off, futures we put them on. Now, this is exactly how we trade SPY options. We look at the /ES chart. Same thing with NQ, but we're trading the QQQ options around the /NQ chart. And the more you browse through the chat room and stuff like that, you're going to understand the terminology that we use. But here we have a 2-hour. We rallied a base and another rally. If we don't see what happens when the market opened. So this is a valid 2-hour demand zone at the 115.70 level. So now if I go to an intraday chart, here's the level that was formed in pre-market. You're obviously not going to see it from a 5-minute chart. But when we did get the confirmation that this was a valid demand zone, the market opened and price came down into the zone. So now this is what I mean by watching price action itself and basically, let it develop. If price starts stalling out at a zone, usually you could go till maybe like a higher time frame and you'll be able to find a valid basing candle forming at demand. So here we have price. If we don't look what happened hindsight, we were selling off and we were stalling out at this level. So usually, this is 1, 2, 3, 4, 5, 5-minute candles. So about 25 minutes of the market open. If you go probably to like a 15-minute chart, you're going to see a valid basing candle. But the next candle, we had a nice strong move to the upside. You can wait maybe until, we start coming up a little bit. You don't want to get an entry too high because now your risk is much lower or much higher. You want to try to get it as close to your stop loss as possible. But like I said, it's all about watching price action. If we go to a 15-minute chart, I'm sure there was a basing candle. Yeah, so, okay, perfect. So we had a valid basing candle right here at the demand zone. So stalling out, new demand is forming. Take the trade long. Buy calls on the QQQs. We go over here. And you're speculating that we're going to bounce out of the demand zone. Don't really have the clearest cut confirmation, but we're stalling out. New demand is forming. Take the trade. Respect your risk. Put it below the low. Put it below the demand zone. Whatever your risk tolerance is. Mine is always below the low. Take it long. Maybe, above this basing candle right here. As soon as you start getting momentum to the upside, right where my cursor's at, around the 11,606 area, take it long, put your stop loss below the low on the QQQ options, and there you go. You have a nice winning trade on your hands. Next one is Apple. If you look to the left, we have a valid 3-hour supply zone. From this basing candle right here, we rallied overnight from a gap up, formed a nice small body basing candle. You draw from the open of the basing to the top of the wick. Next candle was a valid drop, so this validated supply that was forming here on a 3-hour time frame. So now we go to our intraday time frame. Just like price is actually developing. Now this is the first time price traded at the zone since the imbalance formed. You can see exactly what happened. We rallied into the level. Look what happens. It acts like a wall. The whole point of using price action and new supply demand forming is you want to act as a wall. You want it to act as resistance, act as support. We came up, rejected, came up, rejected. Same thing, kind of like double top-ish at supply. Valid confirmation to take this trade short. And we dropped about 2.5 points. So this is another, good trade. Here on the left, we have the S&P 500 /ES, which trades SPY options off of. Here we have a valid 1-hour supply zone from this basing right here, followed by a drop right before the market opened. So now when the market did open, the first time we touched the zone, now this is what I want you to understand. So this is a nice little price tip, volume kind of tip. But as soon as we touch the zone, we start rejecting. If you miss the first time we touch the zone, you always have to let the market come to you. Never chase the market. Let it tell you when. Let it come to you. The minute you start chasing is the minute you're going to start skewing your risk to reward. You're going to start entering bad trades. Start entering when you shouldn't be entering. So let it come to you. If you miss the first entry, if the trade was actually supposed to go in your favor, if you wanted it to, if it was meant for it to work out for you, it's always going to come back, retest, and give you another entry, possibly even a better entry than what you could have got in the first place with less risk and more reward. So here's the 1-hour supply zone. I'll make this a little bigger. So what's important here is that if we start breaking highs, this goes with any stock, any instrument. If you start breaking highs, you have to stay above those highs for the trend to sustain. Think about how many stop losses are above highs. Stop losses usually have to be met by new buying, or else the market's going to come down. If there's not new buying above the highs, the market will come down. If there is new buying, we'll start consolidating, start basing out above the highs, and possibly for another leg higher. So every time we break high a day, break low a day, you always want to see price stay above that level and not fail. So here we have a 1-hour supply zone. First time we rejected, I don't really see any clear-cut confirmation there. I love my basing candles to be the opposite color. So this would kind of look like a nice rally base, possibly another rally if we moved up. So probably would have missed this trade right here. But the next time we touched and broke above high a day, we are inside of a supply zone. Now this is going to get into my next confirmation in the next lesson. I don't want to get too far into detail, but the fact is that we broke high a day, failed to stay above it, and rejected. Same thing right here. We broke high a day by maybe like a tick or two and failed, and then this thing started selling off. So failed high a day breaks are very good indicators about price action. It's telling you that there's no real interested buyers into the market. We could have just very non-aggressive sellers that are lifting up their orders, making price come higher, and then eventually they're actually hitting the market on the bid side and taking it lower. So there's a lot of ways to manipulate price, and this is a good gauge if we come above the high and fail. So that's something as well that I look for, and it gives me proper confirmation. If you got stopped out, let's say on the first time, your risk is small. Got stopped out on the second time, your risk is even smaller. Third time you're in this trade, works out beautifully. This trade right here would have made up for the first loser or the second loser, depending on the trade that you put on. NVIDIA now, this is a good one for me to break down. You really have to think differently in trading. You have to think outside of the box. You have to put your mind to it. You have to have some sort of common sense in trading. It's so complex, and your mind has to be moving at all times. You have to think of certain situations. So here we have a valid 3-hour supply zone from this basing right here. We dropped before the close, and then we gapped down, validating a 3-hour supply zone. Now we also have a 1-hour supply zone inside of a 3-hour zone. So it's a stacked level, which we have a 1-hour right here where my cursor's at. Same concept. Here on the right now, we have NVIDIA on a 5-minute chart. And this is the first time price tested the level. It starts stalling out. Now, again, stalling out at a supply zone gives me, proper confirmation. You could take it short anywhere in this area right here, right? Around the 376 area, stop above the high. Very, very, very minimal risk, I'm cool with taking the trade 10 times and 8 of them being losers because it's such small risk that I would be foolish to actually not put the trade on, especially that we're at an imbalance and especially that we're stalling out. Now, if you respected the plan and you put your stop loss above the high, at first the trade worked out. If you didn't take profits fast, you got pretty much a good $1.50 on this move. Probably wouldn't take profits that fast, but then we came above and broke the high. A lot of people probably would have stopped out here, including myself. Problem with traders is they stop out, they walk away from the screens, and they don't realize when everybody's stopping out, it gives you the best opportunities to enter another position. So we started rallying, and look, we tagged that 1-hour supply zone pretty much to the exact penny. And then the next candle, we started rejecting, coming down. Safe to take this trade anywhere in this area. Stop loss above the high, start stalling out, prices reacting, and we had a nice sell-off in the mid afternoon. So that's something I look for. Again, these types of confirmations, this is going to be the first confirmation video in the section. And this is probably one of the hardest confirmations to understand, the hardest to learn. You have to have a strong mental game. You have to accept losers. And in my opinion, this will only be beneficial to you with more screen time and experience. This isn't really something beginner traders that are just getting into the market are going to comprehend at first. Not something they're going to understand. It's more about pattern recognition, recognizing how price reacts, and having a kind of a larger risk tolerance. But I wanted to put this in the first video because the next couple confirmation ones are going to be very good, and those are my favorite.